I specialize in working with individuals going through divorce, and taxes are a large part of divorce financial planning. Now, apart from a divorce situation, individuals generally employ 3 different kinds of strategies to minimize their taxes. The first one is you want to defer your income. The second one, accelerate your deductions. And the third one is to take advantage of any kind of expiring tax breaks or credits. This is a little bit complicated in the moment by the looming fiscal cliff. So in ordinary circumstances, let's take a look at some of these strategies. So the first strategy is to defer your income. You can set aside your bonus or your income for the next year. Avoid selling any of your investments that have gains. Delay a distribution from your retirement plans. Or maximize any kinds of contributions to retirement savings that can minimize taxable income. Now, conversely, if you think that next year will be a higher tax year for you, you may want to convert a traditional IRA to a Roth IRA this year. You may want to sell investments that have gains. You may want to sell any exercised incentive stock options to generate income. And finally, you might want to reposition your investments to become tax exempt or reduced taxable investments for the next year. The second strategy is to accelerate deductions. And this means if you can take advantage of itemizing your deductions, you can prepay certain kinds of items. You can prepay your mortgage, you can prepay property taxes, you can prepay state income taxes, you can maximize any kinds of medical expenses to bundle them and take them all this year. Similarly, with any kinds of professional fees or tax preparation. And then don't forget that this is the year that we lose that $5 million tax exemption for charitable giving and gifts. The last strategy to minimize taxes will be to take advantage of any expiring tax credits or tax breaks. And there are several that are due to expire at the end of this year, and I'm sure we're all watching them closely. The first one is the American Opportunity Credit, in which you get a $2,500 credit for undergraduate studies. Secondly, payroll tax cuts will expire. The AMT tax cut fix will expire, and then there are others that are being significantly reduced. So it's not too late to have a talk with your accountant, and remember that tax planning should be a year-round exercise and not a year-end effort.